So I've not slept and I'm tired. I came back from work and clearly the stocks market is not doing very well for me either. And especially with what happened with Snapchat. And if you have not seen my video of what happened with Snapchat early in the morning, well, because I did not sleep, I went through with the whole entire thing. I read through the whole thing and I tried to understand the whole thing, and I made a video. So you can just go over to my channel. You can find it. Basically, it's just breaking news. Snapchat will miss estimates. So yeah, you can basically watch that video to kind of summarize what's going to be happening in the entire tech sector as well. But of course, that's going to be talked about in today's news session as well. But anyway, let's cover some news today. All right, so first of all, stock futures dropped in a volatile trading. Technology stocks were particularly hard hit before the opening bell after Snap issued a profit warning. Okay, so I do think that because Snapchat, as much as Snapchat isn't really exactly one of the main leader in the technology sphere, okay, but I do invest in Snapchat, a huge chunk actually. So, of course, this is going to be hitting me quite hard. In the pre-market right now alone, my entire portfolio is down about 12% as of now. So, pretty bad on my side. But of course, because the option market has not really opened yet. So, once the option market topple over, most likely it will be going down to about like 9%, 9 or 8% or so. Hopefully, that's what I'm going to be looking at. But yeah, even though Snapchat is not that big of a company that will control how technology stocks would be looking like, this profit warning by Snapchat basically woke everyone up. Okay, like I said before, I do think that a recession is going to be coming, and it's going to be coming very, very soon. Okay, by no means am I saying that a recession is not going to come at all. I think we're just going to rebound. We're going to have a V-shaped recovery. We're going to go all the way to the moon. All right, by end of 2022, the start of 2023, we're going to go back to the 2021 highs. Okay, I'm not saying anything of that nature. Okay, because we have to understand that looking at how the market is at the moment, it's pretty bad. Okay, and especially with Snapchat issuing the profit warning. Okay, and on top of the profit warning, if you have not watched the video and you just want a very, very simplified version, on top of the profit warning that Snapchat gave, okay, they also talk about slowing hiring. Okay, and slowing hiring has been this kind of trend that's been happening with a lot of technology companies. Okay, you look at Peloton, you look at Facebook, and now Snapchat. Okay, and even Netflix. Okay, so you can basically see that slowing down of hiring is going to be a common trend. Okay, and this is going to be happening with your Twitter, it's going to be happening with your Pinterest, which is why social media companies in general, big hit. Okay, Twitter is down, Pinterest is down, Facebook is down, and so on and so forth. I'm not sure if Trump's Truth Social is down. I don't think DWAC is going to be particularly affected by something like this. DWAC, yeah, not really. DWAC don't really care about this. So I do think that technology stocks in general are going to be getting the full brunt of this, especially in the near future as well. Okay, and something that I do want to actually bring up as a possible concern that we actually have in the market as well, because the moment we actually start to say that, I won't exactly call it a concern per se, because at the same time, it could actually be a bullish catalyst as well. Because, for example, if people are actually slowing hiring, the great resignation is not going to be happening as smoothly as it is supposed to be transitioning to. Okay, and what I mean by that, for example, because in the start of 2022, we were expecting the great resignation to be this huge thing that basically everyone is quitting their job, moving to the next, quitting their job, moving to the next, in hopes for them to get a 20% raise from their previous job, a 30%, 50% raise and such. And people are constantly doing that. Okay, and that's why people were very, very worried about a wage price spiral. But clearly that wasn't the case, because with great resignation happening, people were finding alternate source of income from other sources, aka from their side hustles. They could be flipping stuff on the sideline, they could be investing, they could be playing crypto, they could be doing anything elsewhere other than just their main job. Okay, which is pretty cool. Props to you guys, whoever who's doing all the side hustles and such. And because of that, people are basically thinking that, you know what, I might be able to just quit my job. Okay, and the more people actually leave the labor market, okay, of course, there's going to be a small percentage of people who basically came out to just become their own business owner, they'll just start their own businesses and such. Fair, good for them. Okay, and there's going to be a small category of people who basically are just going to be like, you know what, I don't need a job. I can just fully sustain all my side hustles and such and still earn, let's say, like a comfortable $8,000 a month. Fair enough. And there's going to be another big group of people basically just quitting their job, moving to the next. Okay. And with what technology stops happen, especially with what Snapchat issued last night, well, technically this morning, it was at about 5 a.m. or so where we actually received this news. And you know, when this actually happened, it kind of brings forth a new tonality, because when this actually happened, it simply means that, you know, people might not be able to shift from one job to another so easily. Because, for example, if I'm quitting Netflix and I'm thinking of moving to Snapchat, doesn't really look like a good, like a viable option anymore. Okay, or if I'm quitting Snapchat and I'm moving to Peloton, it don't look like a very viable option anymore. And usually what actually happens is that we have similar industry people just moving from one industry to another. Oh, in the same industry, just moving from one company to another. Okay, fair. And what I'm thinking is that, you know, chances are people are from Facebook or meta platforms are actually moving over to Snapchat or vice versa. Okay, but if Facebook is slowing hiring and Snapchat is slowing hiring, okay, it would kind of bring forth a trend that the whole entire tech sector as a whole might be slowing hiring. And even Apple themselves are already saying that, you know, they are not going to be hiring any new executive as well for the short term. Okay, they're not going to be hiring any new executive in the short term. And this kind of set a tonality saying that, you know, maybe the technology market is not so frothy anymore. Okay, and when I say it's a bullish catalyst, I'm not saying that this is going to be good for the stock market, because it's not. Okay, I'm saying it's a bullish catalyst because it is kind of going to be calming down the market where a great resignation is not going to fully occur. Okay, because when a great resignation do not really occur, it means that everyone's going to be staying in their own jobs. We're going to have good employment numbers. With good employment numbers, that means that's one category down for the Feds. Okay, and if the Feds got this down and the Feds got the inflation down, okay, then we are all going to go back to the original life again. We're going to go back to the norm. Okay, clearly now we're very, very far away from the norm, as you can clearly tell from all the headlines that we're going to be seeing every single day. Which is why I do think that what Snap basically issued as a profit warning really gave quite a scare to a lot of people, especially for myself. You know, looking at my Snapchat right now, pretty bad. But nevertheless, like I said in my video, in the Snapchat video as well, I did say that most likely I'll be buying the dip on Snapchat. I'm just not sure what is a viable price point for me to really get into. I really want to read through the 8K filing for me to really understand what was actually filed with the SEC before I actually make a decision for that. But yeah, and again, you know, like I said before as well in that video, okay, I'm only going to be dollar cost averaging in, not because I don't see a bearish connotation, because I do, okay, but I'm only buying in because I want to lower my average. So for people who follow my content, okay, don't just blindly buy into Snapchat because I'm gonna be dollar cost averaging into it. Okay, I do think that you know, in the past when I was really posting a lot of content on Instagram, and you know, if you're not following me on Instagram, right here at Hauser, I post that every single day. And like, you know, a lot of people used to kind of follow my trades, and I was very, very happy that a lot of you actually managed to make some money. But at the same time, if you follow my trade, I cannot really promise you that there's going to be good rewards, because at the same time, when I actually get out of some position, you only know like a week late, because I only let you guys know what I'm buying and what I'm selling at the end of the week. Okay, and I don't want to be unfair to you guys, but at the same time, I don't want to be reporting what I'm buying every single day. I don't think that I really have to do that for you guys at all. But yeah, so I do think that Snapchat is definitely going to be something that needs to have more eyeballs on. But for myself, I'm definitely going to be looking into a DCA opportunity in the very, very near future. Most likely in this week or the week after. I'm not sure if the price is going to be going up, but it doesn't really matter to me, because if it does go up and I'm still going to be buying it anyway, I just want to lower my dollar. I want to lower my average price downwards. If I'm able to do so, I'll be happy. All right. Anyway, let's not talk too much about Snapchat because I already have a video on that. But anyway, let's move on. There's a rush for cash on the Wall Street. One piece of evidence is the market embrace of dividend-paying companies over the firm that do buybacks. Cash is king right now. The latest evidence, the market embrace of dividend-paying stocks over another long-time favorite, firms that do buybacks. All right, so cash is king. And I think that a lot of people like to do the comparison for, we're going through so much inflation. And because of the amount of inflation that we're getting, cash is trash. We should invest into companies as soon as we can, okay? It's fair for you to actually think of it that way, but at the same time, you have to understand. Let's just say, for example, if cash, let's just say today I have $1 million, okay? I have $1 million, and let's just say inflation is working at 10% at the moment, okay? So that means every single year I'm losing 10K. For example, let's just say inflation is horrible to the point where I'm losing $10,000. Is it 10,000? No, I'm losing $100,000. I'm losing $100,000 every single year. Okay, is that bad? For example, okay. And of course, the correct mindset would be, hey, you should just invest. You should just invest. True, but at the same time, you have to also think of it this way, because whatever you're going to be investing, are they actually going to be going down because of inflation as well? Because if you're actually spending your money, for example, if you're spending your money on food, you're spending your money on clothing, you're spending your money on electronics, things that actually get eaten away by inflation, fair, okay? You're getting destroyed. But what you are intending to buy, for example, you're going to be buying a house, you're going to be buying stocks, you're going to be buying crypto, you're going to be buying all of these weird assets, for example, okay? Or you're buying luxury goods, which are also a form of, investable assets. And if you're buying into all these sort of commodities per se, if you're getting into all these assets usually drop in price during inflation. And if all these prices actually drop during inflation, if they actually drop more than 10% per year, chances are you're doing a lot better holding on to the cash. So, for example, if I, like I said before, if I have $1 million and I'm going to be losing $100,000 every single year, okay, due to a 10% inflation, for example. And right now, I got $1 million, and let's just say I actually wanted to buy into Netflix. Okay, pretty bad, of course. And Netflix, let's just say Netflix was actually at $400, not even at its peak. I'm just going to say $400. I want to buy the Netflix at $400. And then a year later, Netflix suddenly went down all the way to about $100. So I lost $300 per stock. And aka, most likely, I lost about 60% of my money. Okay? And that's not going to be something good. So if you're holding on to cash for that instance, for example, you're actually quite golden, because if you're holding on to cash for that, and Netflix basically just keep on going down, and you can just buy Netflix when it's going down even more, okay? Because inflation is going to hit companies like Netflix quite hard. It's going to hit companies like Target quite hard. It's going to hit companies like Bed Bath & Beyond quite hard. It's going to hit companies like AMC. Well, not really AMC, but it's going to hit companies like all your tech stocks, okay? It's going to hit Tesla. It's going to hit SoFi. Is going to hit Palantir. There's a lot of sectors that's going to be hit by 10% inflation, okay? And because the money that you're going to be spending to buy all these assets are all going to be affected by more than just 10% inflation, holding cash is actually way better. So yeah, I completely agree with this. Cash is king right now. And I completely understand where they're coming from. And of course, right, the baseline for this article is not really what I'm talking about, but I just wanted to make that point for you guys. The market embrace of dividend paying stocks over another long time favorite, firms that do buybacks. So of course, for firms that do buybacks, such as your Apple and your Google, okay, those are essentially what we call as long-term growth stock. Okay, of course they keep on doing buybacks, and because when they do buybacks, it simply means that there'll be more growth that is going to go into the company over a long period of time. But right now they're saying that people are actually getting into dividend-paying companies. For example, your AT&T and your Verizon, and also your BAC. All these companies that basically keeps on giving out a dividend of about 4 to 7% every single year. And the more they keep giving out all these dividends, okay, they're just going to be getting 4 to 7% every single year, as compared to a possible growth or no growth for the year and sort of that nature. They are basically going for the safer bet than the potential big growth coming from those firms that do buybacks. And fair, I do see that as being a very, very big possibility that's going to be happening in the entire market at the moment. Cash is king. You can't argue that. All right, moving on. Didi said that it would proceed with delisting from the NYSE. And yeah, this was actually announced yesterday. Let's look at Didi's price at the moment. Didi price actually went down all the way to $1.44 in the pre-market, just moving by 1.39%. So yeah, Didi went down clearly. And yeah, I do think that Didi going down is going to kind of bring forth. I would think that this is going to bring forth some weird ripple effect to the entire Chinese tech companies, simply because Didi actually had a lot of underlying problems. They weren't supposed to really be listed into the IPO for NYSE. And when they were actually doing it, there were a lot of regulatory attacks on them via the Chinese regulators as well. So even post IPO, they had a lot of controversy over that. So right now they're basically delisting. But like I said before, I don't think that this is actually going to form any sort of a ripple effect to cause, let's say, like your Neo and your Xpeng, or even your Pinduoduo and your JD. And Alibaba and such. However, I do think that at the same time, they're not going to be doing super duper well in the NYSE, because at the same time, you do have to understand that China is already in recession. Sad. All right, anyway, let's move on to the next one. Starbucks to exit from Russia. Honestly, I don't really think there's much for me to really explain for this, because Starbucks exiting Russia just kind of makes sense. I think McDonald's did the same anyway, so yeah, all right, next up, GameStop launches digital wallet for cryptos and NFTs. All right, so I actually released a video about cryptos and NFT, I think on Saturday. Basically talked a little bit about the whole crypto and NFT side of things. And I released the video talking about regulations behind NFT and cryptos. And the previous Saturday, I actually talked more about cryptos and NFT, and mostly about the whole stable coins, depegging of the UST and such. So in those videos, I actually touched upon a little bit more about NFT and crypto as a whole. Okay, and I don't think that it really makes sense for GameStop to be launching a digital wallet for crypto and NFT. I do understand that, of course, those long-term GME supporters are going to be loving this. They're going to be like, oh, this is going to be a bullish catalyst. Okay, we're going to get our digital wallet for the crypto. We're going to get into NFT. Fair, okay? GameStop supporters are generally going to be into cryptos and NFT. It's kind of being expected of them as well. But I don't think that is going to be helping much, because those supporters don't really have deep wallets. A huge percentage of them do not have deep wallets. I do think that maybe out of the entirety of all the GameStop supporters, maybe 10 or 20% of them have deep wallets, and the rest are basically just supporters with a few shares of GameStop or even AMC, just to prove their point against all the hedge funds and such. So I'm not saying that I'm against the whole movement for GameStop and AMC, because I do hold AMC myself. I just don't hold GameStop. But I don't think that GameStop launching a digital wallet for crypto and NFT is going to be doing a huge like a huge deal for the entire stock price of GME. If anything, I do think that there will be more price movement for GME during a sudden SSR, which is a short sale restriction, or a sudden big price movement for GameStop. I think that would actually trigger more of a bullish catalyst for GME rather than just some digital wallet for crypto and NFT. My own personal thought, I guess. All right, let's move on to the next one. India to limit sugar export in risk to global food prices. India set to restrict sugar sale as a precautionary measure. Move could be announced in the coming days. So yeah, set to restrict sugar export. Sugar price to jump, of course. Commodities in general are all going to be jumping, and this is something that I've been talking about as well, which is food shortages. So even in Singapore, we also received a news saying that Malaysia is going to stop selling. Well, they're going to be halting export of poultry, aka just chicken, over to Singapore, and that's going to be affecting prices of chicken. And let's be honest, it's not just prices of chicken, because the whole point of a food shortage situation is that it has a big ripple effect. Okay, a shortage of chicken is going to cause price increase in chicken. Okay, that's the first layer. Okay, the second layer is that prices of chicken is going up. What am I gonna do? Maybe I will eat pork. Maybe I will eat duck. Maybe I will eat mutton. Maybe I will eat beef. And all those alternatives are going to be going up in price because there is not enough supply of chicken. And the same thing goes. And then people will start to be like, oh, okay, prices of meat in general are going up. Those are the layer twos. And then, prices of meat in general are all going up. So let's go vegan. Let's go soy, for example. And then that's the layer three. And that's going to be affecting more of those other prices. And let's not forget, within this layer one, layer two, and layer threes, okay, you have to also take into consideration those people who are actually selling all these layer one, layer two, and layer threes. So for example, okay, with chicken export basically being halted from Malaysia, okay, people who are selling chickens or those raw chickens and such, those people are basically going to be not having a job for quite some time, because there's no supply for them to do anything. There's no demand for their work anymore because they don't have any supply. Okay, and then that's going to be causing more situation, and then you can add the whole layer one, layer two, the whole thing all over again, which is why food shortages is definitely going to be affecting us to a certain extent. Price increases is only one thing, but if this actually continues and this actually persists, that's where the trouble actually comes in. And of course, with this situation on sugar, and India is a huge exporter for sugar, so I do think that that's going to be furthering my concern for the whole food shortage situation. All right, social media stocks set to erase $100 billion on Snap warning. This is huge, of course. Right now, looking at my Snapchat, oh my God, it's still going down. Oh no. Right now in the pre-market, Snapchat is now 30.6%, aka losing, having the worst day since their IPO actually. Right now, Snapchat is about $15.59, which is why I said, okay, there's no rush for me to get into a DCA position just yet. I do think that, I will only get into a DCA after I actually read up on the 8K filing, which I'll be doing right after I upload this news segment for you guys. All right, anyway, let's read up a little bit more about this. Nasdaq futures fell 1.7%, set to extend tech stock slump. And of course, adding to woes for the sector, which is already reeling amid stalling user growth and rate hike fears. And yeah, okay, if that moves whole, the company will lose about $10 billion in market value. And it's not just about $10 billion in market value for Snapchat, because we have to also include Twitter, we have to include Pinterest, we have to include Facebook. We even have to include Google as well, because Google, at some point, we actually have to consider Google as some form of a social media company as well. Facebook. Yeah, Google over here, Twitter, Pinterest. Yeah, so the entire social media group may see about $100 billion wiped out from this whole entire thing. So yeah, pretty bad. Revenue cut, one thing, slowing hiring, another. But same thing, I'm not going to be harping too much over this because, like I said before, I think we already went through enough about this. All right, next up, China plans to tax relief of over $21 billion to lift economy. Honestly, I don't really want to read much about this because this simply means that China is in recession. When they actually start to talk about tax reliefs, usually we are actually entering the territory for recession as it is. Because let's be honest, we heard a lot about this during the COVID 2020 period of time. So, all right, let's move on to CNBC. Crypto exchange FTX quietly shops for brokerage startup amid move into stock trading. I think for FTX, I'm almost certain that people who are actually in the market, trading in the market, you most likely already know about FTX. And Sam Bankman-Fried or something, the CEO and the founder of FTX, basically bought a huge stake in Robinhood, which basically spiked Robinhood price upwards when I was still overseas in Phuket. Love it, but of course, I do think that that's basically what they're trying to do. They're actually trying to move into stock trading because right now they are doing crypto. And I do think that they finally realized that how short-ended can crypto trading be, especially if you look at Coinbase, if you look at Gemini, you look at Kraken. If you actually go through all the filings, you can see even if you go through Robinhood and Weibo, you can see that through all the filings and such, you can see the amount. The volume of trades for crypto is going down substantially. People are now basically not even selling. Okay, people are just basically just holding, waiting for the crypto cycle to come back again. Okay, so there's no buying and there's no selling. So crypto is basically going through somewhat of a slump. And of course, with the crypto exchange for FTX, they think that maybe this will be a good time for them to actually expand towards stock trading. So pretty smart on their end, I guess. All right, next up, we have Belgium becoming the first country to introduce a mandatory monkeypox quarantine as global cases arise. Honestly speaking, I do think that Belgium might really be doing something wrong. But okay, honestly, I kind of don't want to be the one to have the hot take for this because it could very well be the next COVID-19. Okay, it could be Monkeypox 22, Mpox 22 or something. So of course, I do think that WHO did say that as long as you guys are aware of this and you don't let it spread, it's not going to be as contagious as what happened with COVID-19. But yeah, Belgium introduced a mandatory 21-day quarantine for the monkeypox patients as cases spread globally. As of now, right now they have about 92 cases of the disease in 12 countries, with a further 28 suspected case under review. But of course, this is news as of yesterday in the morning. So right now, I'm expecting it to at least be somewhere in the 150s and such. So yeah, I'm not sure if Belgium is doing the right thing, but I sincerely hope that they are doing the wrong thing. I really hope that they are not doing some forward-looking thing where I just come back and say, man, Belgium, you guys are smart for doing it. I really hope I don't. All right, anyway, move on. Okay, yeah, this was basically the article that I was actually going through in the morning. All right, that's all I have for today's news. And I will post this out as soon as I can. And I will most likely be working on another video for Wednesday for tomorrow's posting. And also, I will have to go through the 8K filing for Snapchat to see what the Evan Spilger, what did Evan Spilger said. So yeah, anyway, thank you guys so much for watching, and I'll see you guys tomorrow.